Hey guys, Will here. Gonna go through the markets again, as I usually do, stock market indices, and then we'll go into ETFs and stocks that you can look into. Um, I'm using TC2000 software. If you want to get a free trial or $25 off your subscription, check out the link in my description below. Thanks to everybody who's picked this up already. I use this every day, quite a bit during the day. I love this. Even on weekends, I scan stuff, so I've got different columns here. You can see this little check mark you can scan, and I'll talk about that in a bit. But I also got some lines on here, which I use. There's a palette over here, so some support and resistance lines and stuff like that. So if we look at the Nasdaq, you can see here we're in a downtrend. If I pull back, it keeps hitting these little rallies, bear rallies they call them, bear market, and we kind of bounce off the 200 or the this downtrending line. So higher lows or lower highs. We flattened out a bit here, and we sort of hit a resistance point, and but I don't just get in right away if I'm going to buy on the reversal. I like to see it up above this 8 EMA with a green volatility stop. And then I also look at price percent oscillator. I'd want to see a crossover. So right now, it's not a great situation for going long, I guess. Although it could be, if you're looking for a reversal, you want to see a higher low, not just a few up days. Even if you get a cross of the MACD, like you can see here, MACD or price percent oscillator is the same thing, momentum. You want to see higher lows, which we haven't got. We just have three, basically, touch points here. Below the 50 is below the 200. So we'll have to see if that starts to develop an uptrend there. Or if it breaks this support, then there's probably another leg down. We've been seeing like Apple and Amazon and those big stocks that were holding up the Nasdaq and SPY kind of having troubles. If we just take a look at Apple, I can just type in AAPL here. We kind of broke through that support, and then we're just hanging right around that point right now. So we'll see if it can sustain itself. But if we look at S&P, similar situation, bounced off that recent support. It is curling around a bit, and so we'll see if this reverses in the new year. But the chart doesn't look great right now. In a nice uptrend. I'll just show you something like Turkey is this ETF. It's a bit extended right now, but you have this unbelievable. I'll turn off but you pull back to the 50, and then you have this really beautiful uptrend. What you notice here is that, hopefully, is that the moving averages that I have on here are in sequence. So you have the 200 at the bottom here, 50 is above the 200, 34 EMA is above the 50. And then, the 8 EMA is the one is a T line, that's also above, but these main longer term ones. So you get this consolidation of the moving averages, and then they start to spread out there. So, and I'll talk about that in a second with one of my scans, but finally Dow Jones, that was doing the best. We had a break of this downtrend, and then potentially a support off of the 200, and you can see that it's curling a little bit around here. Dailies is one thing, but weekly can show you that we are in an uptrend. We've crossed up. It is kind of pulling back a bit here, but if you go to any of these indices, Nasdaq, we've curled back down. It's not a very good uptrend. So if you look over here, this is a weekly chart, but 50 weekly is above the 200, 34 weekly, same sort of scenario. When you have them aligned in a sequential manner, you often get really good things. So, That's one thing to keep in mind. So don't try to force trades. Things aren't going well. One of the things you have to keep in mind nowadays with the Fed and all that stuff in the States is the macroeconomics. So I've got a couple other things on this chart. One is the UUP, which is the dollar index US. So US index has shown, the US dollar has shown a lot of weakness relative to other countries. It's, from its high strength here, it's down quite a bit. And that usually helps out gold and commodities, which I'll hopefully show. But the inverse, the TLT is the bonds. You can see it's been going down. It's going down as well as the stock market in parallel, so that's interesting. But the TBF is the inverse. So you can see that this chart would generally represent the interest rates of the 20-year, but you can see that they're going up again. So they went up quite a bit. The markets had a big problem. They pulled back, and now they're heading back up again. So the question is going to be, is the Fed going to raise rates more than expected and also hold them up higher longer than expected? Because people think, at some point they're going to freeze it or reverse it. And if inflation stays high and doesn't come down as much as they think, that might be a problem for the market. So that you have to keep that in mind. Dollar, look at interest rates in the dollar when you're also looking at this stuff. So from there, we can look at my next tab, which is the US sector ETFs. I have it sorted by percent change, but that's just for the one day. So, instead of just clicking around like this, these charts look really bad. They're just consolidation. They don't have any definitive uptrend. What you can do is go to 30-day or 5-day. I have that as far as the gains. That starts to show you a bit of the ones that have a bit of an uptrend going, gasoline. So we're getting back up above the 50. Platinum is doing well. It's broken out above this high here. Momentum is above zero, crossed over. What else? Wheat's starting to, have this little rise here, crossover here, just about to hit the 50. Oil's coming back, crossed up here. Could have another leg up again. It's got the 50 is above the 200, the 34 is not quite above the 50, but so that's not great, for these types of ETFs. So when you have negative, when you have the indices not looking great, I'll often go to the inverse ETF. So what I've done is over time I add ETFs to a watch list. So once you have a watch list, you click on this, add to personal watch list, and you can put them on there. You can also right click and say copy to, and then you'll get a list of personal watch lists as well. Another watch list which is kind of built in is the flag. In a sense, you can flag these really easily for this is what I use right now for potential imminent purchases. So I have different watch lists here that I've created manually, waiting if I can't create a formula, like exact formula. So I have pulling back in an uptrend. Like this one is in an uptrend and now it pulled back. So you're looking for pullbacks. Obviously I'm not going to buy that right there. It's crossing down. But a lot of times you have this pullback, but you're still in an uptrend like here. So I'll manually create, edit these. This was pulling back, but now it's heading back up again. So I might flag that and I'll remove it from this watch list. Or if I'm waiting for a pullback, there's nothing in there right now. Something that's broken a downtrend like this and it's starting to head up, this one's here, but they don't necessarily have a higher low. This one was starting to break the Bitcoin inverse was breaking this recent downtrend, and but it wasn't really like established with higher lows and stuff. You can see this chart doesn't look really good in terms of an established uptrend. So there's some manual ones I have, but when I see a negative indices, I start to look at inverse funds like REC, which is the inverse short real estate. You can see we broke this downtrend, and we're above the 50. Now the 50 is sloping downward, but it is above the 200, and this is a potential entry point. You've got this is what I was saying right now. We are in an uptrend. It's still above the 80 MA, but a couple of down candles, and so DOG has got a red volatility stop, but it's holding this little recent support. So we'll see if we can head up even more. That's on the inverses S&P 500. So they're all kind of precarious right now, just where they're sitting. RWM is the opposite of IWM. This has a red volatility stop, but started establishing higher lows here and breaking this downtrend. So that's kind of why I look at some of these inverses. There's a Tesla one. If you just want to invert, I wouldn't personally buy this right now, but you can see how we had this continually, and then this went parabolic. That's usually when, at some point you're gonna drop from there. But if you just want to buy the inverse of Tesla without shorting it, and there's other stocks like that as well. Crypto I mentioned. The VIX is interesting. It's kind of flat right now, but the momentum is slowly heading up. So this could have a reversal, which would be bad for the markets, or it could break down and continue head down again. So not a definitive decision rate in this point. So I mentioned that I have a scan that is called 34 EMA greater than 50, and 50 MA is greater than 200. If we click on it, we can see that 34 is moving averages greater than the 30. Oops, this is supposed to be, this isn't the exponential, but I can change this right here to exponential. So it's a 34 EMA is better than the 50, greater than the 50, then the 50 moving is greater than the 200. Oh, and then what I added was 34 has a slope of 0.1%. So I just wanted to see that the 34 was moving upward. You could do a bunch of things there. You could have the 50 moving upward and the 200, make sure they're all sloping upward or whatever. You could add like an 8 EMA in there, it's greater than the 34. But it just gives you a relative idea of things that are heading in a nice uptrend. So let's look at platinum. See how these are aligned. Silver, it just crossed here. So it's kind of high up here and it's crossed down on the momentum, but you're going to start to identify, hopefully, like this type of scenario where you get these longer runs when you're heading back up. So this is showing strength in certain, this is a way to just identify things that are showing strength. This has been in a consolidation period. So I'd look for a breakout of this high before I would even consider it. And like I mentioned, Turkey, for me, it's way too extended, but it is in this uptrend here, but it's been in there for quite a long time. So there's been multiple touch points. So if you can extend that, once you break through that, you're probably going to have a downturn. If we go back to sectors and you find something you like, there's often stocks within that. Like XPI is not right now exactly, but we have some higher lows. We're starting to, it could, if it breaks through this downtrend, that's a possibility for an uptrend. Obviously, technology is a risky area right now because of interest rates and stuff like that. But if you click on this open component watch list, you can see a lot of stocks in there. And then, so I've got if you want to set up what columns to have when you open up a component watch list or any other anything you scan or watch list, you can save the column set as the default, and that'll open up for watch lists and stuff like that. So that's why this shows up. So if I create columns or add insert columns, and then I want to save it, I right click and say save the column set, and then I can save it as a name, or I can have it used as a default. So once you open up all the stocks for an ETF, then you can determine, if you want to scan that for some really good stocks, depending on what you want. So like for that one I just showed you, you click scan, select conditions, add a condition. If I go 34, I get this 34 greater than 50 greater than 200. So let's pick that. And then we get quite a few let's just sort by 30 day. Yeah, I don't like these ones that jump like that, but those are obviously strong. Pharmaceuticals are obviously highly volatile when there's like a discovery or some approval, government approval. But, I'm just trying to show you that you can drill down and get stocks if you want from an ETF that you're interested in. There's not always stocks in that ETF. Like iPay, I'm not saying I would buy this. Sometimes the data is not correct in the ETFs. I've talked to TC2000 about this, and sometimes I don't get anywhere. So like you see here in the wheat fund, there's no stocks. It's just wheat. Like it's a commodity, so there's no stocks in that particular one. Hydrogen has Bloom Energy. It might have other ones, but unfortunately they don't always show them in here. But you can see Bloom Energy might be turning around, but not great. And then Fuel Cell. So I'm not super keen on this type of stuff right now until I see like a reversal in the tech stuff. But I think that's good enough for now. Hopefully you enjoyed that. If you want to get TC2000 free trial or $25 off your subscription, check out the link in the video description below. I've got the gold plan and I've got real-time US data so that there's no delay in the US data. During the day, I don't want to see a delay. I like to see it in real time. So hope that helps, and we'll see you guys in the next video. Happy New Year.